Let's do it. I'm streaming on YouTube and the virtual trading floor. I'm associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. On the position disclosure here, I added DNA to the long side of that earnings trade. I'll talk about it. And I wasted a little bit of money hedging myself by shorting some TQQQ and some UPRO, which I'm keeping as per my game plan. Nothing too heavy, but enough to take the sting off of a technical pullback off of extension should it actually happen. Where are my charts? Oh wow, what a strong day. This market move, I don't know if I've ever seen anything like this at the point that it's getting to. This degree of this move in such a short period of time. I probably have at some point in the last 12 years, but it definitely doesn't stick out to me. There's not a single red day in here really, except for we had this one, the last time I hedged myself, we had a one-day technical pullback, which was perfect for me to cover the majority of my hedges for a small profit. Did exactly what I was looking for off of that extension. I kept a little bit of it that I got, stopped out of pretty much the next day, because then we were no longer extended. And now today, I mean, this candle is just in outer space here right now. I mean, this is nuts. We've been talking about the space above 458 to 460. That if you get a closing high above there, that we are technically bullish. So as far as I'm concerned, we are now technically in a market that is bullish, which means that you want to err to the side of your longs. We went from a market that's neutral to a market that's technically bullish, but, and this is a very important but, we got that close in massive extended territory. So I don't really feel that way unless we're getting a close above this same 460, but without extension. And we got the close above 460 today, but it's with a large degree of extension. 80 EMAs at 450, 21 EMA, and they're spreading apart, is at 442, with the market at 461. So we are $11 extended from the 80 EMA on the SPYs, which is a good amount, with a flat 200 day. The Qs here, very similar situation. 370 is technically that spot. So we're going from neutral to technically bullish with the Qs, but once again, have to take that with a grain of salt because the degree of extension here in the Qs is getting particularly silly. 80 EMA on the Qs is at 358, and we're trading at almost 371. So we are extended by $13 just from the 80 EMA on the Qs, and we are extended by $21 or so from the 21 EMA, getting to be a lot. In some ways, the more interesting index to me right now is the IWM, because the IWM was not extended coming into today's trading session, whereas the SPYs and the Qs certainly were. And the IWM was by far your relatively strong index. So I guess just to look at percentages. SPYs, another 1% day, 1.1%. Qs, 1.6%. IWM, 2.5%. So IWM actually playing some catch-up today because they had some relative weakness in here. And I had been saying, 207 on a closing basis is where we would get bullish. I guess 207.50. And we kind of did have that one close there, but it's a little bit extended, so we took it with a grain of salt, right, Rowan? Animal spirits. So we got the pullback, and now the Russell just launched higher today. The Russell actually has a declining 200 day by a small amount, which I do think is notable. But in some ways, this is the best looking index to me. It's really cleared all these resistance levels. And yeah, are we extending the Russell after a 2.5% move today? Yes, but it's by $5. So it's not too crazy. So today I did start to hedge myself a little bit. You know, same thing. It's the same exact game plan, honestly, that I implemented here. With a, you know, we'll see if I get a similar result or not, I guess. But market just is getting very extended here. It isn't possible for the market to continue this slope, which is elevating even more for a significant period of time. It doesn't mean that we can't have another day or two to the upside. But by that point, if we get another day or two to the upside, you'd really be looking at like a blow off top situation almost. Like it'd be nuts. But this market's been very loose. It's been pretty crazy. So I am looking for some sort of technical correction here through price or time. Last time I was looking for that, it was really, the market's been so bullish, it was only one day. But we'll see here. Got from Andy, got well over the 8 AVWAP. I pointed out earlier, good strength, talking about the IWM here. So here is Andy's chart that he's sharing. Yep, you can see this kind of clearing higher here using Trend Spider. Yeah, so definitely some different takes on similar information for sure. Andy coming at us with his CMT designation, right? Anyway, so that's kind of where we're at. This rally is so impressive. And then you look at like Apple. You know, I sized down on some Apple into the close here. I'm in this move, you know, but this goes back to what I'm always talking about. Put yourself in win-win situations, trim and trail. You never know just how big of a move these stocks can go. Did I think when I was buying Apple at 150 pre-market on this day that the stock would be at, you know, 179 in, what is this, 11 trading sessions of just straight up green bar after bar after bar after bar? I mean, it's just completely insane. The answer is no. I did not actually expect that, but it doesn't mean that I'm not here to ride the wave and to make a profit. My game plan today and my thought process coming into today, because we were gapping up, was gapping up with this degree of extension into resistance. I can't buy most stocks right now. And as a matter of fact, since I have longs on, I probably want to look to hedge myself. If I didn't have longs on, I don't think I would just kind of be blindly pressing the short sell button like I was to hedge myself. Then you would really need to be looking for more of like a technical signal. And there were some technical trades here that you could have taken, though keeping them into the close turned out to almost be impossible. I love shorting the SPYs through 460 this morning because that was our big key level. We opened up above it, had this quick little snap up for 5 minutes, and then came all the way back down. I love this short here. It's a decent amount of risk, $1.75 worth of risk, but you're looking at reward potential. You know, even if you could get a pullback to 452 off of that, and it makes it a really good risk reward. I loved even more because the risk was more appropriate, doing basically the exact same thing with Q370. So Q370, this is the one I was really kind of hollering about in the VTF. Similar situation, opens up strong, but in this case below 370, trades right through it, puts in a high of 370.72, and I love the idea of shorting the Qs back through 370 versus this high. You're putting on 75 cents worth of risk there, and if you got a weaker close, which we easily could have gotten, I know we didn't, you know, you could be coming in for 75 cents worth of risk there for $10 worth of reward on just a simple technical pullback to the 80 MA on the daily chart. I really like that with where we're at. And you got definitely enough of a pullback here to certainly cover your risk. I think some people were in that short and were looking to be a little bit greedy with it, which I totally understand. And then this rally into the close was so incredible. We were trying to hold 460 and SPY 460 and Q370 as intraday resistance. I was trying to respect that level, and then we just broke through it. The bullish option flow today was just bonkers. I don't even really know how else to describe it. It feels like some of the strongest flow we've ever seen coming in today and coming in, I think it was Thursday of last week, was that other day where we just saw a sick amount of flow. And obviously there's been some on other days, but those 2 days just really, like, Pat had his fingers cut out for him today, just getting that information in the VTF over and over and over and over again, just more flow, more bull flow, more bull flow, more bull flow. So crazy. And I got to think that that's long starting to come in and chase at this point or something, or people just getting completely blown up in shorts at this point. The upside move here is just so incredible, especially, you look at this Apple chart. I can't get over this Apple chart. I can't get over this Apple chart. I was just saying, like, guys, I really don't think we're going to see a V-bottom this time around. Yeah, for sure, Judy. And I'm glad you did. I really don't think we're going to see a V-bottom this time around. Wasn't I just saying that a couple weeks ago? And look at this Apple chart. I mean, oh my God. It's not like we're at all-time highs yet for the SPYs or the Qs, but Apple, which has been showing relative strength for quite some time, is really like a hair away from all-time highs at this point. So it's incredible. So anyway, sorry, I'm getting distracted by how incredible some of these charts are. The game plan today, and I still stand by this game plan no matter how well Apple performed. The game plan today, I thought, was to be very cautious on most things, to be cautious in some of these FANG stocks, your Apples and your Teslas that have gotten really extended, and to focus on these growth stocks. I really thought that there was a possibility that these growth stocks, which were not extended, could get some follow-through. And at the end of the day, that's right. They did. The execution on them all wasn't easy. Some of them were fantastic. Robinhood was like... The Robinhood idea that we mentioned in the morning meeting today was just... This trade was beyond money. We talked in the morning meeting about buying Robinhood on the open versus 13 or versus the pre-market pivot of $12.93. This trade was just incredible. And again, the bullish option flow that was coming into Robinhood in the day that was just juicing this easily could be in this thing for 15-20 cents risk and caught a $3 plus upside move on it, which is just obviously really spectacular. DNA was one that I was looking at, which was off of an earnings report. I was trading this after hours yesterday, and I liquidated my position, which was such a mistake, and I kind of knew it. And I shouldn't have done that. And then I'm looking to re-enter as the market's opening, but I really wanted a price around 4. So I paid up a little bit right before the market opened. I took the offer of $4.12 to be able to get some stock. But then I put out some really big bids just a little bit lower, and none of them got filled. But I still had some stock for the move, and I'm still keeping some because it traded really well. Not only did I think growth stocks could go today, but this thing off the earnings report, we kept seeing, and I don't remember who it was, maybe one of you guys know, who had been putting out this short seller report on DNA, speculating that the company is engaging in fraud. I don't remember who was putting that out, but they kept saying, like, we think that once they get through the lockup periods, that insiders can sell, and then when this earnings report hits, I think it was particularly this earnings report, that everybody was going to see like all the fraud that was going on with this company. Well, the earnings report came out, they beat on their revenue, there was no indication of that, so I really liked the idea of this DNA catching a big bid, as any shorts that were following along with that short report, it's just proven to be not true, and they're kind of getting blown out of the water. So this thing gave a great 24% move here. Yeah, for sure, I'll do that in the Q&A. So this thing gave a fantastic 24% move. I was a little bit lighter than I would have liked, but it was just another really good trade for the team here. We talked about going long Bed Bath & Beyond versus 24 on a pullback. Unfortunately, the only pullback was pre-market. I was able to buy some pre-market below 25 bucks, and that was some that I had sold the day before at a higher price. So I was really just rebuying. I wasn't able to get too heavy versus 24. So I think the pre-market low was only like 24.70 or so. That one gave a fantastic move for anybody who was able to get it. And then again, we were just broadly looking at these growth stocks for moves today because they weren't extended. Like, you look at this WOOF I've been talking about as a potential breakout through 20 every day. Finally went, and it went, and it gave a really good move, and you could have gotten in this thing for 13 cents risk through 20 bucks off the open, and it was a good trade. There were some others out there that were a little bit trickier. Like, I know some people were looking at like a PayPal, which again, it looked great the second that the market opened. This pullback when the market weakened, though, made it difficult because it broke the opening low to be able to keep it. Square was actually kind of a similar situation, which was another growth stock that we had on the list today to potentially be able to go. But the other part of my thesis So I thought that, you know, with what the headlines that we were seeing this morning on the improving Russia-Ukraine situation, I thought that we were going to see a potential big unwinding of energy stocks today, which for me, because I've had the thesis on being long energy stocks, shout out to Stefan on it, since prior to Ukraine and Russia, I thought was going to lead to a great buying opportunity on like a real big dip. I wanted to see some of these energy stocks, Apache, Oxy were particularly on my radar. I wanted to see them getting hit 8% today, something like that. And then I was going to really look into come in and buy that heavier dip if they got unwound. And it just didn't quite give it to me. So I thought that we were going to get, you know, selling in these stocks as those growth stocks got bid up and as the market itself struggled because of its extension. And I was half right. Those growth stocks really went. But these energy stocks that gapped down, the gap down itself was the extent of your opportunity. I wanted a bigger sell-off than that. I have alerts out for Apache starting at $36 to be able to come in and buy. Wasn't able to get any of that stock down there. They just opened this thing up, filled the gap, and just went. I mean, incredible move here in this Apache. If you weren't patient, a lot of times the problem is the opposite. You kind of need to or want to be patient on some of these things, and this was not the case at all. I really thought that these things could see a sell-off. Be patient. I could get some great prices in Apache and Oxy, and it just didn't give it to me. So is what it is. You know, continued relative strength there. Market once again holding up incredibly well, and that is really all I got. I think overall it was a fantastic day for the team. I know a couple of you guys caught that Robinhood as an example that we spoke about in a really big way. So congratulations if you are one of those traders. And then there was just a lot of other things that we had on our radar. We were smart enough to be able to look short for the indices, at least off the open, and then look for the growth stocks to catch that bid. And as a result, it worked out really well, even if I lost a little bit of money net at the end of the day here on the hedges I put on. I don't regret it. I think it is prudent at this incredible degree of extension that the SPYs and the Qs have to, you know, take a little risk off the table. So that is all I got. And I am happy to answer any questions that any of you guys have, just like always. Okay, let me scroll up here in the VTF, and I will start with the beginning. So we got some interesting earnings reports, right, that just came out, right? Micron is just crushing their numbers and beasting. This Restoration Hardware doesn't look like the numbers were great, but they initially traded this thing higher because of I think a 3-to-1 split. Is that what I read out of the corner of my eye? So that's impressive. Lulu looks like they announced a $1 billion buyback. That thing is absolutely crushing it here. Then you got like a Chewy that is down. I didn't really look at the numbers for Chewy. That's a quick after hours earnings report update. Will mentioning the 3D printers were beastie. Yep, also growth stocks that we had on the list. We talked about DNA long through 1650. SSYS I know is your favorite. We talked about this thing through 2550. I mean, you could have gotten the crazy thing about some of these growth stock momentum trades today is how little risk you could have gotten on some of the entries. Like this SSYS move. I mean, we talked about buying at 2550. Where did it open? It opened at 2551. You literally could have been in this thing for 5 cents risk. Like it just bonkers, that move. 1650 on Triple D here. You could have been in this thing for 14 cents worth of risk to be able to get that follow through. And this is what I'm always talking about, by the way. I know somebody was asking me yesterday in the afternoon meeting about, when do I like to buy high versus when do I like to build into a position on a dip, and I said it really depends on the type of trade and the type of stock. This is what we're waiting for. There's so much, false starts and garbage, and just happens to be Triple D that I have up here, like on the way down here, where if you were just buying this stuff on the way down, you could have gotten wrecked. These growth stocks, we know that they have the capacity to move 100, 200% in short periods of times if they want to, if the momentum comes behind it. I mean, just look at AMC. They have that capacity. So, but don't try to buy these things where who knows where they actually belong as far as their price goes, just catching knives on the way down and hoping. Let the price action come to you. And here, the thing turned around a little bit, created this bullish consolidation, is starting to get above some recent lower highs that were there, and then you just got the great setup that kind of comes in to be able to take the momentum trade for small risk when the probability is actually on your side. So that's really, really good stuff there. All right, so from trade 117, wondering if you could just explain an inside 5 setup a little bit more. For example, the inside 5 and up, a strong higher green opening 5-minute bar, then an inside 5-minute bar when the buy stop above for that continuation. Where would the out be on these setups? Sure. So let's just take a half step back a little bit. So basically the question is on inside 5s, but I'm going to broaden it a little bit because the concept of an inside candle applies on any time frame. So, one of the things that we do in our pre-market research is we identify good-looking stocks that are in periods of momentum or trend on their daily charts for inside days for continuation. And you can apply that same thought process on small time frames, a 5-minute chart or a 15-minute chart, inside 5s, inside 15s for continuation. So very simply, before I make it a little bit more detailed, because it's not this simple. Very simply, an inside candle is a candle, including tails, that is in the range of the previous day's candle. So if yesterday's daily candle has a high of 70 and a low of 66, and today's daily candle has a high of 69 and a low of 67, that would be an inside day. And an inside 5 would be the exact same thing, just a bar whose entire candle is within the range of the previous entire candle. And again, we can use this as an execution setup specifically for when we like other things. So the simple answer to your question is, if it's a long trade, you buy the break of the inside bar, inside 5, inside 15, whatever. You buy the break of the inside bar, and your stop loss is the low of the inside bar. That's the simple answer. It definitely gets a little bit more complicated. Here's the thing. I promise you wholeheartedly that if you buy every inside candle that you find in the marketplace, inside 5, inside 15, inside hourly, inside daily, I wholeheartedly promise you that you will lose money in the long run. If you try to buy every inside 5 that you find in every stock and just buy it when it breaks and put your stop in at the low, you will lose money in the long run. It's not that simple. This is where it's important to understand, this is a strategy for execution specifically for when you like other things. We want those other things generally, almost always, these are going to be with trend trades. There's kind of like one example where it could be like a counter trend trade. I'm not even going to get into that. But almost always is going to be a with trend or a with momentum trade. And there's really 2 types of inside candle setups that I'm looking at. One is the momentum continuation, and one is the trend continuation. So again, this is when we like other things. The worst time to be involved in inside candles is in a broad consolidation. A broad consolidation. And why I say broad consolidation is actually like if you have a bull flag is a consolidation. Stock just gave a momentum move and now it's resting. I actually love when the bull flag ends with a tighter inside candle right at the end of it, because it can really let you initiate the trade of a bull flag, but utilizing the risk of like an inside 5. So you can get like even tighter risk for bigger reward because you're like trading the bull flag, but you're using the inside 5 as execution when that ADMA catches up. And a bull flag is a consolidation, but it's a consolidating pattern that occurs after momentum or with trend, right? So that's an example that's okay. But if you just have a market that's just going sideways and it's the middle of the day or whatever, or you have a daily chart for something that's just going sideways and you're trying to execute the break of an inside day within a range or the break of an inside 5, then, right in the middle of a big range, again, great way to lose money. So I like to utilize this inside 5 execution setup for momentum continuation or for trend continuation. When we're talking about momentum continuation, This is similar to this like 1, 2, 3 setup that we were describing in yesterday's afternoon meeting, which is a setup that I've always, communicated, but never called it a 1, 2, 3 until I found out very recently from one of you guys that's what Sami Abu-Sad calls it. And Sami's obviously a good trader, and that's the term he uses for it. It's much more simple than how I've been describing it for years, so I'm starting to use that terminology now as well. So basically, you have a big upside momentum move, a big green candle on good volume, and then you have a little rest candle. That's really what an inside bar represents, by the way, is a period of rest. So you get an inside candle, that's a rest candle, and then that inside candle breaks up. And you are buying for momentum. You're buying the break of the inside candle versus the low of that inside candle, looking for the continued momentum to come in after the short rest period. So that would be an example of utilizing an inside candle for momentum continuation. The other situation is trend continuation, which is a little bit different. So let's just use an uptrend. An uptrend is a pattern of higher highs and higher lows. So people ask me all the time, Derrick, I'm looking at this trending stock, so like, you know how I like to trail? In an ideal world, if I was like the perfect god of trading, which I'm not even close to anywhere near that, you would be able to sell every pivot high perfectly, and then rebuy every pivot low, and then sell the pivot high and buy the pivot low, and sell the pivot high and buy the pivot low. No one is that good. There's no one who can perfectly execute the sale at every perfect high and buy every low. So that's why I like to trail, because I'm not good enough to be able to liquidate my position and just rebuy it, and liquidate my position and rebuy it over and over and over again. I will end up missing the big move on the trend, which then will cause me to make less money than I probably would if I was constantly in and out trying to be able to sell every pivot high and buy every pivot low. But it doesn't mean that there can't sometimes be a technical setup to buy that pivot low. So again, when you're in that uptrend, what is an uptrend? It's a pattern of higher highs and higher lows, but there's really two types of uptrends. There's that, there's also stair-stepping trends, which are basically a series of bull flags, or you can combine the two. But basically what you're having in a trend is a market that extends to the upside, and then either gives a price or time correction into equilibrium, and then gives continuation. That's exactly what that is. So your market moves up, it gets a little bit extended, that's your pivot high. It comes down usually into that equilibrium area, somewhere around the 8 to 21 EMA, creates a pivot low, and then you get your next higher high, higher low. So it's a series of of price corrections over time, as opposed to the stair-stepping trend, which is a series of time corrections over time. Market gives a big move, goes sideways, moving averages catch up, no longer extended, next big move, sideways, bull flags. And again, or you can combine the two. So people always want to be able to buy in a standard uptrend, higher highs and higher lows. They want to be able to buy the low of that price correction, right? When that pivot low is coming in, and now the next high is going to come in, you want to be able to execute that perfectly. So how do you do that? How do you know when the stock is giving its pullback from the last high that it actually is going to give another pivot high, as opposed to just having a reversal and coming all the way back down? And how do you know also where to buy? I don't believe in just buying on moving averages just for the sake of the moving average. It's just a squiggly line. I do like to utilize that space between the 8 and 21 EMA as a general equilibrium area where broadly the stock should pivot. But in a strong stock, that pivot could happen a little bit above the 8 EMA. Or maybe it happens touching the 8 EMA right at that upper band of equilibrium. Or maybe it pulls back a little bit deeper and it happens right in the space between the 8 and 21 EMA, right in equilibrium. Or maybe it pulls back even a little bit deeper than that and it ticks the 21 EMA, the lower band of equilibrium, and creates the higher low and gives continuation. Or honestly, maybe, sometimes this happens. It happened in one trade I think we were in just a couple days ago. It pierces even the 21 EMA, creates a tail, and then comes back up and had an even deeper pullback. Well, if you just bought at the 8 EMA, assuming that the pivot's going to happen at the 8 EMA, and the pivot actually happens below the 21 and then comes in and your trend is still intact, you are enduring a lot of pain on that pullback. You might not even be able to keep it. And again, this is all assuming that it's not actually the one time where you're coming in and buying and the stock is actually reversing, in which case you're getting smoked. So I don't like, even when we want to try to anticipate that a pivot low is going to come in that's going to lead to continuation, I don't like to just throw a bid out at the moving average and hope that this is magically where that pivot actually happens. I want the stock to tell me that it's actually pivoting into that equilibrium area and give me a signal that I can actually execute on. And the signal for trend continuation could be what we call a continuation hammer. Basically a hammer candle that happens in that equilibrium zone with a little bit of a bottoming tail, and once that closes, you can buy. You know where your stop loss is, and you can assume there's a good probability that that's going to be the pivot low of the trend you're buying on the way up. Or another way that I like to do it is through an inside five. So your market is price correcting back down into that equilibrium zone. Maybe that last candle is like a nice red Maribozu candle, and then the inside five happens, and then that inside five breaks to the upside. So once again, you're buying the break of that inside five in the equilibrium zone, and this is a way that this pivot is being formed. In that case, when I'm doing it like that, I actually prefer to use the low of the outside candle, not the low of the inside candle as my stop loss. So again, broadly, generally, it's going to be the low of the inside candle or the inside five that's going to be your stop. But I prefer to use the actual anticipated pivot low if it's a trend continuation trade where I'm utilizing the inside five. Even if that means it's going to be a little bit more risk, I like to know that the actual pivot point, which is always the more important spot technically, is what matters. So I hope that helps. Again, just to sum it up, inside candles are an execution strategy for when we like other things. All of our other layers of probability, trending and momentum, not sideways price action, and most of the time that stop loss will be on the other side of the inside candle, but in a certain circumstance, maybe like the trend continuation circumstance that I was explaining, you actually might want to use the low of the outside candle as the stop loss. So, hope that helps. Next I'm seeing here is from DJ. If we're still extended tomorrow and want to look for shorts, would it generally be better to look for stocks that are as extended or more extended than the market like Tesla, or weaker stocks like Baidu, or kind of a happy medium? That's a great question that I don't have a great answer to. I would say not Baidu, because Baidu is going to trade with a lower correlation to the market because it's a Chinese company. So I think that when you are looking at the market being even more extended tomorrow, potentially if we get a gap up, and you're looking for those shorts, you want to keep it in the realm of kind of companies that are going to be correlated to the market extension that you're trying to trade off of, as like that's your, really the extension is your layer of probability, and now you're looking for an actual executionable setup. Like for example, shorting the Qs back through 370 this morning, that's the executionable setup. Is that it broke above resistance and it's coming back down. You're shorting through the level with your stop loss at the high, and not just kind of blindly doing it when it's on the way up. Again, just to kind of go back a little bit to the inside five discussion, as a great general rule, you always want to be buying stocks in the way in which they're moving. So that's why, if you are trying to catch a falling knife, you don't do it with bids. You wait for the pivot to come in and you buy it on the way up. Or even in an uptrending situation, you don't just put bids out in the spot where you expect the pivot to come in. You buy it on the way up versus that kind of low. So you still want to have your trade set up. And it should be something that's correlated to the market. Now, this is something that's always super tricky, I think, which is the direct answer to your question. If I'm looking to short something, because the market here is super extended, it's because of this degree of extension, it means I have a better probability shorting than buying type of situation. So now I want to look for my trades. Do I look for the stocks that are the most extended because they're the most extended? Or do I look for stocks that are lesser extended because they've been relatively weak? And I don't have a great answer for you on that. The relatively weak stock has a layer of probability that's relatively weak, but doesn't have the same layer of probability of it being extended. But you're kind of playing off the market a little bit, which would be a layer of probability on your side. Or the stock that's super extended, even more extended in the market, well, that stock is extremely extended, and that's going to be a layer of probability against you. But the relative strength of that stock that made it that extended is a layer of probability that is, I lost my train of thought, is against you. Let me just repeat that. Or the more relatively strong stock is going to be even more extended. So that degree of extension is a layer of probability that's for you, but the relative strength is a layer of probability that's against you. Now I know I said it right. So I really don't have a great answer for you on that, DJ. I think it is just kind of based on how things set up. Do you have a setup in that even more extended but strong stock that's enabling you to put the short on? And then in which case, if the risk reward makes sense, then you just kind of go for it. I get very nervous though when I'm shorting something that's getting hit with all that bull flow. Definitely makes me nervous because I've fought bull flow in the past and it to no avail. It doesn't work out. It's when things are getting hit with heavy, consistent bull flow, it is generally a real strong layer of probability on the side of it. And I've been on the opposite side of that. So it's one thing I would pay attention to for maybe not shorting. So that's that. Some news in WeWork. Yeah, WeWork cleared the $7 seller today, so maybe that thing can start going soon. Yep. James Robertson saying that Sammy likes the inside candle to be in the top third of the previous candle. It's not necessarily as important to me, nor is the shape of the candle, nor is the color of the candle, if it's actually able to break. Yeah, I'm just trying to think. Yeah, it depends, I think, a little bit on the situation, but that's good information, James. Thanks. Sounds good, Nick. No problem. Trade 117. Yep. Yeah, so the second part of your comment here, Mr. 117, is struggling to tell when a stock is too extended at 9:35 or 9:40 a.m. And I get that. So the first thing that we need to understand is that an extended stock can always become more extended. And when can an extended stock become more extended? When there's volume and momentum. When do we typically see the most amount of volume and momentum in the market time of day-wise? Is the beginning of the day. So I, as a general rule, am a little bit less apprehensive to buy a stock that's extended if I'm doing it at 9:35 than if I am at noon. That's going to be a very general rule. To me, that also depends on how it got that extended. Did it just get that extended because it just had a big gap? Or did it get that extended because this thing opened up flat, came in with huge volume, and there's this crazy green Mariposa that's coming in? The second scenario is really showing me that the momentum is actually there, and I'm more inclined to still take the trade. Another big thing for me, if I'm executing early on in the day like that, is my stop loss extended? It's one thing if I'm buying the stock and the stock's a little bit extended, I can potentially deal with that a little bit because that extension could correct through time and price and my trade could still work. But if the ADMA, if the ADMA hasn't caught up to my stop loss, so basically my stop is in extended territory, that makes me nervous because that's when it's very easy to get shaken out of something that still works. And that's something I really, really don't like. And then you also have extension on multiple time frames. Like, there's things extended on the 5-minute chart because of the second scenario I just talked about where heavy momentum and buying came in right off the open, but it's not extended on the daily chart and it's breaking a big daily chart level. That could be just the beginning. And that's actually a buy that I really like. But if I'm looking at something that's extended on the daily chart, gapped up really big, one of the things, so first of all, I love gaps. I think everybody knows that because gaps could be an advantage in the morning. I hate when we have flat opens because I don't have that same advantage. The type of gap and the spacing of the gap and where things are in the daily chart, all of those factors affect what I want to do. Do I want to be booking profit into this gap? Do I want to be looking to buy, but I got to be a little bit patient because the gap is making things extended, so I got to wait for the small time frame moving averages to catch up so it's not extended in the small time frame so I can potentially get continuation. All of those factors are really going to affect the trade and kind of the execution and what I'm looking for and how patient I'm looking to be off the open. So these are fantastic questions. These are the questions I love that when people bring them up in the afternoon meeting, because they're great and they benefit everybody. Scrolling through here. Gabriel saying, I feel like when it's at a top, momentum comes easier. I'm not sure on that. I'm not sure on that. For counter trend trades, would it be good to use the outside bar as an out, since we would expect that low to hold, or not, since the inside should hold? So I don't really like utilizing inside bars for counter trend trades, because an inside bar is a period of rest, and if it's counter trend, that's actually supportive of the trend. You know what I mean? So if the market's going down and then there's an inside 5, and the inside 5, fine, it breaks up, but that could just be breaking up a little bit or shaking you in and out, and then breaking down, because the trend itself is what you want to assume is going to continue. The only time I really like a counter trend inside bar is after a hammer capitulation candle or a shooting star capitulation candle on the upside. So the market gets super extended, gives you that kind of higher volume hammer that we're looking for, and then gives you like a quick little inside bar because the market is confused but it's still extended. You can utilize, if the inside bar then breaks up in the counter trend direction, you can utilize that as an execution to be able to get in with less risk. And in that case, I would probably look to use both stops. Have some on the inside bar out, because it's going to be tighter and that can give me a better risk reward on a snapback to equilibrium. And maybe use some with the outside hammer bar low, because that's the real pivot point. Part of that's also going to determine, be based on degrees of extension as that setup actually occurs. So, yep. Yes, Natalie, Stefan got out of MGI. Yep. Okay, cool. I think we covered all the questions, and they were good questions too. Some information here from Nick, or question or comment. Let me read it. Very similar to what I said about an inside 5 pattern. Sammy likes seeing the continuation hammer, since it increases your confidence the trade will work, since it's viewed as a failed breakdown. I don't understand how it's viewed as a failed breakdown. Another layer of probability, for sure. Yeah, that continuation hammer for trend continuation is something that I am a big fan of. So awesome, Nick. Glad that you're learning. Okay, cool. And again, guys, these are the types of questions I love. So, you know, people who are, I know that there are a lot more people in the VTF than who actually actively comment. So if you're one of those people lurking in the background, don't be afraid to ask questions. This is how we all learn. And, you know, even though we end up reviewing in an afternoon meeting probably every 2 months how inside bars work, it doesn't mean that we shouldn't do it, right? It's a great opportunity for everybody in the team to learn. Questions here are always highly encouraged. Questions at all levels, from more basic questions to more advanced questions. This is how we as a team make improvements. It benefits everybody's P&L. So don't be one of those quiet people on the sidelines. Put yourself out there. It will only help you. And being too quiet, honestly, will only stunt your growth a little bit. So, keep up the strong communication. We got a great team. We've been doing really well as a team so far this year, despite it being like a lot of people are considering this to be a really difficult, tricky market. Overall, as a team, we're doing fantastic. So let's continue to, keep focusing on bringing it to the next level. And I will see everybody tomorrow. I got to go pick up my skis. I usually try to do my work on my skis myself, but I just got so much damage going on my skis with core shots and things like that. P-Tex isn't sticking in, so I dropped them off there. So I got to go pick them up and Driggs. Have a good night, everybody. See you tomorrow.